The Bank of Canada's interest rate is not the control knob for home prices, but every time there's a rate cut, there's talk in the industry that this could be the thing that saves the housing market, bringing back higher prices and better conditions for sellers. But that's not the truth, and I'm going to explain why. Let's quickly rewind to 2019. The Bank of Canada's rate was 1.75%, then COVID hit and they slashed it to 0.25% as the entire country essentially shut down. In March of 2022, the bank began its aggressive rate hike cycle to fight inflation, raising rates 10 times from 0.25% all the way to 5% in less than 2 years. By July of 2023, things had changed again. Inflation was slowing and nearing the target, but the economy was also cooling. Keeping rates that high carried risks of its own. So the bank began cutting, and since June of 2024, we've had 8 total rate cuts, dropping the rate to 2.5% today. Now here's what happened to home prices during that same time. When rates increased, prices dropped, and that made sense. Inflation was a problem, the cost of goods was rising, and higher mortgage rates directly impacted what buyers could afford. From February 2022, when rates were at 0.25%, to July of 2023, when rates hit 5%, home prices in Durham region dropped 21.7%. But here's the kicker. From July of 2023 to August of 2024, while rates dropped from 5% to 2.75%, home prices dropped another 10.5%. So if rates are dropping, meaning buyers technically qualify for more, why aren't prices going up? And why is affordability improving on paper, but sales are still at historic lows? Because interest rates are only one piece of the housing market puzzle. Some people look at it like if A happens, then X should follow, but they're forgetting about the rest of the alphabet. There are so many other factors at play. When rates dropped to 0.25% during the pandemic, that wasn't a normal economic cycle. That was a once-in-a-lifetime shutdown of our entire economy. The bank cut rates to rock bottom to encourage spending at a time when people couldn't or wouldn't spend. During that period, households saved money, borrowing was cheap, and once the economy reopened, that money had very few places to go. A huge amount of it ended up in the housing market. That's why prices exploded in 2021 and early 2022. Now rates are back in what the bank calls the neutral range, not stimulating growth nor restricting it. But prices aren't rising because the fundamentals have changed. Unemployment has been climbing since 2022, income growth has been slow, and after adjusting for inflation, still lags behind pre-pandemic years. Debt loads are heavy, and families are still feeling the pressure of higher costs from things like tariffs and trade wars. On top of that, people have seen home values fall almost 30% in just a couple of years. They've heard the horror stories of buyers buying at the peak, losing hundreds of thousands of dollars. That creates fear and causes buyers to lose confidence, causing some not to feel safe purchasing at today's prices, even with lower borrowing costs. And although inflation is better than it was, the cost of living has permanently jumped since 2020. So even with rates lower, homes are still expensive for first-time buyers. Entry-level homes in my market of Oshawa and Durham region still often carry mortgage payments of $3,000 or more per month. Meanwhile, rental prices have been coming down, and for many, renting is looking like the cheaper, less risky option right now. So if 7 consecutive rate cuts before today's cut haven't boosted sales or prices, it doesn't really matter if they cut 1 more time, 2 more times, or even 3 more times before spring. Until the broader economic picture improves, home prices likely won't. Now, technically, a rate cut only directly impacts buyers with variable rate mortgage since fixed rates follow bond yields, but cuts can still have an impact because they can influence consumer confidence. Sometimes lower rates create optimism, which fuels activity. But right now, confidence is lower, and rate cuts alone are not fixing that. Remember, rates come down because the economy is weakening, and a weakening economy is still not a good sign for housing. When the economy slows, people worry about job security, wages, and debt. And when you add in the stories of massive losses since the peak, it's no surprise that caution is high. Rate cuts are a symptom of an unhealthy economy, not a signal of a housing rebound. Now, I want to be clear, I don't like fear-based messaging. I'm not here to scare you into selling today. That was the same tactic buyers heard during the run-up. Buy now before you're priced out forever. This isn't sell now or your home will be worthless. My advice has always been and will always be, you move when it makes sense for your life. For most people, housing decisions are not about timing the market. They're about family, jobs, or life changes. The reason I'm making this video is because I know that there are agents and brokerages who will use this rate cut to try and push buyers back into the market or convince sellers that prices are about to bounce back. And in my opinion, they're either not paying attention to the data or they're choosing to ignore it. I'm a realtor here in Durham region, so this is the area that I follow very closely and make videos about. Here's where it sits today for some context. In August, we've officially hit 4 months of inventory. That's well in balanced market territory. And the first time we've seen it hit that high in over 15 years. As of mid-September, we're already at the 5 months of inventory mark. And the last time that happened here was 2008 during the financial crisis. If inventory stays above 5 months, the downward pressure on prices will be more than what we've experienced recently. Every single metric shows that we're trending towards a buyer's market and have been for some time. And I get it, as a homeowner, you want to make sure that you're not leaving money on the table. You've spent years taking care of your home and now have poured hours into cleaning, decluttering, staging, preparing, and investing in your home. To then hear that it's worth less than you thought is tough. It's natural to want to wait if you think prices will bounce back. But the reality is 5 months of inventory, record high active listings, low sales, rising unemployment, and shaky confidence is not a recipe for higher prices. From last September to the peak of this year's spring market, prices only increased 2% on average and just 1.2% at the median. Each year, our spring market performs worse than the last since 2022. So at today's inventory levels, the odds of next year's prices being higher than today's are very low. If you're waiting for a higher sale price, ask yourself, are you willing to risk selling for less in exchange for the chance at maybe 1 to 2% more at best? Again, I'm not here to scare you. I just don't like seeing people spreading misinformation. My advice has always been and will always be, move when it makes sense for you. And if you're selling and buying in the same market, it often balances out. If you sell at a time that doesn't favor you, you're likely buying at a time that does. But here's the thing, all it takes is one neighbor in your area to accept a low offer because they felt pressured to sell, and that becomes the new comparable for your home. Every sale resets the bar, and in these market conditions, buyers will not pay more than what they think your home is worth based on that recent sale, no matter how much effort you've put in. I've seen this happen a couple of times recently where a seller has accepted significantly below market value for their home because they needed to sell to support their purchase and did not leave themselves enough time, and then other homes in that pocket sold for less because that was the new comparable sale. This is not a market where testing the waters makes sense. You either need to be priced realistically to encourage buyer interest and activity, or decide that you're okay to wait it out, which could take years to get back to the prices that we've seen in the past. If you want an honest, transparent look at the Durham region real estate market, subscribe to the channel. Hit the like button if you found this helpful, and if you have any questions about buying or selling in this market, use the link in the description to book a call with me. Thanks for watching, and I'll see you in the next one. Bye.